Hello YouTube, welcome back to Patrick Boyle on Finance. So in today's video we're going to talk about the Berkshire Hathaway Annual Meeting that just completed, and I'll give you a quick rundown of what happened in that video. And this is the second video I'm putting up today. I put one up this morning relating to the Berkshire Hathaway quarterly report which came out, and so in that video I said I would make a second video telling you about what Warren Buffett had to say. So stay tuned and we'll see what went on. Okay, so let's get down to it. I'm moving fairly quickly. I normally am a little bit more prepared, but I've just got a bunch of handwritten notes here. Just finished watching the live stream of the Berkshire Hathaway Annual Meeting. Now, normally if you look at some of the older meetings, they're, sometimes 8-hour long speeches. And so I thought this year it's going to be a little bit quicker because it's just Buffett and Abel this year. Charlie Munger wasn't able to make it, neither was Ajit Jain, who is another senior person within Berkshire Hathaway. And basically the question that we want to answer, and that I think the investing public are interested in, is what is Warren Buffett doing in this coronavirus crisis? What's his view on the market? Is he investing? Did he buy any of the dip so far this year? And the answer, as I pointed out this morning, is that he has not really put any cash to work, or much cash at all to work, in the first quarter of the year. And so what did he have to say? What was his explanation? Well, he spoke for quite a while, probably about 4 hours. And he talked first about the health and economy of the United States. And essentially he said it's very difficult in this time period to know how things will work out. And so he just really didn't say very much about that. He said that there are a very wide range of probabilities on the economic side. So there are many things that could happen, and that he has no real expertise in order to tell you what he thinks is likely to happen. So essentially he said it's a random event, and that's how he's treating it. He says that we just don't know what happens when such a shutdown occurs. There's no parallel to it in the past. He then gave a rather long talk about the positivity of America. He said that this is the best time and place to be born. So if you had a choice of any period in time you could be born, or any place, you would always pick the United States in 2020. And he says nothing can stop America. Then he gives a quick sort of history lesson of the United States and the sort of investment case for it. And he talks about how he kind of comes up with evaluations for America around the foundation of the country based on the value of the land, and points out that there weren't really businesses or houses or an awful lot of sort of capital projects in the United States at the time. And so he then works out the value of the United States today and says that it's a 5,000 for one gain in the value of the United States over the 231 years of its history, inflation adjusted. And he then goes on to tell you how you should always bet on America. And essentially, it was a very American argument, but I think in truth he was just saying bet on human progress. There's 100 years ago or 200 years ago, no one would have believed the kind of houses people live in, the cars and the airplanes they drive around in, the computers and mobile phones, and all of the amazing things that have developed in the last couple of 100 years. So he's very positive on the United States. He talks about how it wasn't always an easy path. He talks about the history of the Civil War, that 6% of the prime age males were killed in the United States during that period. Obviously there's a bit of a comparison there to the coronavirus and to the potential for how many people could possibly be killed, and obviously he's saying the Civil War would have been significantly worse. He talked for quite a while about the 1929 crash and how the market performed during the 1930s when he was a young man, or a boy. He talks about where the stock market was on the day that he was born, and talks about how it might have seemed already he was born a year after the 29 crash, and the market was up about 20%, and it looked maybe like it was just going to be a recession and then turned into the Great Depression. Now, this is sort of the direction the conversation went in. It was really rather gloomy listening to him talk because, I think he was trying to be very positive and to say, bet on America, buy stocks for the long run. But there were an awful lot of kind of gloomy comparisons coming up. He talked about how his father used to be an equity salesman. He worked for a local bank and used to get the local people in Nebraska to invest in stocks, and kind of said that his father had to essentially shelter in place. He had to hide out after the 1929 crash because, he'll have gotten people into stocks at much higher levels than they would have been at during Warren Buffett's youth. But he then points out that, after 2 years after his birth, the market was down 83%, having rallied that 20% after the 29 crash, and that it took 20 years until it recovered to the level where it was at when he was born. Now, I presume he's excluding dividends from that because there wasn't a 20-year down period in the market. Then he goes on really just to say that he does not know what the market will do in the short term. Anything can happen. He says, bet on America, but be careful how you bet, So this is kind of the direction of the conversation where you could tell he was trying to be on uplifting and say, invest in stocks for the long run. But then he was, bringing up scenarios of 20 years of, no return. He talked about working for Benjamin Graham and how when the market in the 1950s had reached the heights it had been at pre-29 crash, how there were all these hearings where Benjamin Graham had to go to Washington to testify about whether the market was too high or what should be done about it. So he really just says he does not know if now is the right time to buy, and clearly by the fact that Berkshire Hathaway has not been investing, he doesn't necessarily feel it is. He talks a lot about how his job is to preserve the wealth of the investors in Berkshire Hathaway, and that he has always been conservative, and that it's very reasonable for him to have this $125 billion in cash that he has right now. Once again, it got kind of negative. He says that earnings have no means in terms of forecasting right now. I don't know what shutting down the economy will do. Operating earnings for Berkshire will be worse than they would have been without the virus. So essentially he says, this is the worst quarter that Berkshire Hathaway has ever had. And it was kind of a gloomy outlook. Like he basically said, this virus is going around. It's harming a lot of the businesses that he owns and equally the stocks that he invests in. So he says, invest in great companies. He praised the Fed quite a lot, once again, rather gloomy bits where he talked about March and April, the largest months for corporate debt issuance in history. We don't know the consequences of the swelling of the Fed balance sheet, so he really praised the Fed Chairman Powell and said, it's great that he was there and that he did the right thing and that was great. But he says that, he's going to hold on to his cash position because you can't always count on the government to help you out like they did in this March. He says that he bought a little bit of stock. I mean, it's a tiny bit of stock. He really hasn't changed his position very much, as I mentioned in this morning's video. Then he goes on to talk quite a bit about April. A lot of the conversation, like I'd say, 2 hours of it was just about like the sort of general feelings about that, America's a great country and that it's good to own stocks. He does talk a lot about, very low interest rates that we're in right now and that we've been in for for quite a number of years, and basically says, in any sort of long-term scenario, you can expect stocks, and by that he just means businesses, business earnings to outperform the return that you'll get on a bond. So he's definitely not saying buy bonds, but he really didn't come out and and pushed the idea that it's a good time to buy stocks. And if you watch my video from this morning, I talked about Warren Buffett's favorite indicator towards the end of that video, and that really is flashing a sell signal right now. He talked quite a bit about airline stocks. He basically said that what he did sell in April were airline stocks. He said that he bought into the 4 largest airline companies in the United States and essentially just decided that that was a mistake. He says that the airline business changed in a fundamental way. He doesn't believe people will be flying as much going forward as they have in the past. He's talked about, it could be 3 years before people really start flying significantly again. He just said the world changed for airlines. I wish them well. Like, that was his line. I wish them well. He praised the CEO, said they did a good job, but basically said they took on so much debt that the equity ownership, he didn't say you shouldn't invest. But he said it's not about the stock price. He didn't sell because the stock price was down or because he even felt that the stock price would stay down. He said that it was about the business, that he didn't feel it was a good business anymore. So that's really the wrap up of today's Berkshire Hathaway annual meeting. I've sort of condensed about 4 hours of conversation into, it looks like, about 10 minutes here. Hopefully you find this useful. If so, hit the like button, hit the subscribe button. Tell me the kind of videos you'd like me to make in the comment section below, and I'll try and make the kind of videos you guys like to watch. Anyhow, see you guys later. Bye.